Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 1st of September. I'm Daniel Lam, your host for the podcast. Last week, we spoke about French politics. Well, there's also brewing politics across the Atlantic, namely the questioning about the independence of the Fed. Trump had been criticizing Powell for not cutting interest rates, but there's now more pressure on the Fed as he attempts to fire Fed Governor Lisa Cook over mortgage fraud allegations. Now, this saga can have serious implications on the confidence of America's economic institutions. The transitory inflation episode back at the end of 2021 is still fresh in investors' minds. High interest rates were able to contain rising prices without a recession so far, largely because people still have faith in the Fed, that it would be able to get inflation back to its target level at 2%, preventing a repeat of the wage price spiral in the 1970s. This will be very difficult to pull off if it were to be further shakeout of the Fed's reputation. Lisa Cook has pledged to be fighting the firing in court, in the meantime, to stay in her post. This would take time. Investors will be increasingly reflecting the uncertainties into risky assets. This can weaken the US dollar and also lead to rising bond yields, especially now that the US is running a fiscal deficit at 7% of GDP, 3 times as high as in Nixon's day, which was the last time that a US president has been intervening with the Fed in order to lower interest rates. However, so far, investors have not been reflecting these fears in risky assets. That in itself can be an issue, because Trump has a tendency to keep pushing until he meets resistance, the so-called taco, or as we prefer to call it, the Trump put. So it is possible that Trump can step up on his actions against the Fed. What may he do? Well, the most obvious one would be replacing Powell when his term expires in May 2026. But before that, there will be a vote in early 2026, when the 7 Fed governors approve the 5 regional Fed branches' choice of presidents. Now, if Cook were to be pushed out and the Senate confirms replacement for both her and Adriana Kugler, another Fed governor who has recently resigned, then in principle, 4 of the 7 Fed governors will be Trump's appointees, and they could push for regional presidents that are aligned with Trump. So this goes back to our emphasis this year that diversification is key to navigate these uncertainties under Trump 2.0. Investors should be looking at assets such as gold, which is a natural hedge against de-dollarization and volatility in risky assets. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.